Good Friday morning, everybody. I'm Zev Fema, research analyst for Action Alerts Plus, here live on the floor of the New York Stock Exchange with Jim Cramer. Jim, let's dive right into it. Jobs report this morning. There's a lot of fear mongering out there. What I'm interested in, though, is opportunity. What are you seeing in the markets?
Well, I think that Larry Kudlow, the chief economic advisor, came up with some very good figures about job creation that are really being missed by the labor number. The job creation being created, I think, as he agreed with me, by the Shopifys, by the Etsy's, by the Amazons.
Jobs that aren't really captured.
Right. See, the new economy is an economy that is a shared economy, is an economy that is very much of an enterprise economy, and it's not being picked up because it's not traditional ADP number, not traditional labor number. I'm not saying that they're not paying taxes. I am saying that that's where jobs are being created now. As far as being able to find a job, it's the best it's ever been in my life.
Right.
You want a job? Got a job. Look at but the employment breaks it down by race. White people, okay, that's how they put it, 3.23, but black people still too high, 5.5. I want to see that number lower, and then I know that this economy is now 5.5 is historically very low, but I'm just saying that there's jobs for everybody, and that's a great thing.
Right, absolutely. And while we're on the macroeconomic, let me just ask real quick. President Trump has picked you up a little bit on Twitter talking about the Fed rate cut. I don't want to get into politics, not what we do here, but let me ask you this. If we get the Fed rate cut, does that incentivize Trump to go tougher on China? We know what happened last time we got it.
Yes, and I think that one of the things that he needs is cover. Now, I think one of the things that upsets the president, and I totally get this, is he would like to see a coordinated attack where the tariffs do not hurt the country because rates come down. And rates coming down would be very good for everything from housing, autos, really great, home equity loans, really great, this price off of that. So I think that the president has a point, which is that why can't he say how he feels about the Fed? Now, I have said that he's got to do it differently in terms of the way he says it, because I don't want Jay Powell to say, you know what, I do want to cut rates, but I'm not going to let that guy make fun of me.
Put him in a bind, wants to look independent.
I know. I mean, I think that you don't need to do it. But look, that's tactics. And the president, when I worked as an apprentice, when I worked as a judge, he has his style and I have my style. And I think it is about style. And I think that if I were Fed chief, I totally agree with him. But Jay Powell made a series of mistakes. And it's very hard to own your mistakes. I mean, there are things that I have not done in my time that I've had to admit that people say I did. I mean, there are people who say, listen, Jim, you didn't get people out of the market, but it was bad. And it's like, enough. I mean, I almost got suspended from my job because I tried to get people out. So there's just all sorts of different things. They're like these, Cottage Village stories about how the Fed chief said in October to raise. Right. And he's never admitted that he did that.
Right. We don't want to keep harping on that. Let's just get it right now.
Right, but it just matters that you have to own it. And Jay's got to own it.
Right. Exactly. All right, Jim, let's switch it up real quick. Last night we went to Twitter. We wanted to see what's on everybody's mind. Our buddy Steve Guilfoyle, a.k.a. Sarge, who writes for Real Money, really amazing. He had a really good question he wants to ask. Would you agree that for equity markets, price discovery has become more of a reflection of what's happening now and less forward-looking, in other words, discounting the cash flows, the old auction style?
Absolutely. And what we've had is a market that every day reevaluates, but on nothing.
Right.
I mean, bank stocks were up big yesterday because the yield curve might be less inverted. They're down today because Bank of America gets downgraded by Keefe. I mean, nothing. I mean, one of the things, nothing's happening, for heaven's sake.
Right.
So, I mean, don't foment. I see reasons being fomented today to buy Procter & Gamble. Revaluing Procter & Gamble. We revalue every day. It's crazy. Now, Lulu needs to be revalued. I did a piece in Real Money. It's stock of the day, by the way.
Right.
Let's revalue that. That makes sense. But stop revaluing companies on every little data point because nothing's really happening.
Right. So that the cloud is growing, people are investing in that. That continues to grow.
People are selling the cloud today. And why are they selling the cloud? Because people say, you know what, that's going to grow even without stimulus. And again, that's also a big mistake. You buy winning companies. It's just like what we do bull market fantasy, play your studs, play winning companies.
Absolutely.
Now, and by the way, let me be very clear. When I say play, I'm talking about invest. There was some clown on Twitter saying that I encourage day traders by throwing balls. I mean, my show's been educational for a decade, just focused on education. And but there are a lot of people who haven't watched the show, who comment about the show, and these people are ill-informed.
No, absolutely. So you actually jumped a little bit ahead of me, Jim. The best 3 words to describe any quarter, in my mind, would be beat and raise, and that's exactly what Lululemon did last night with their quarter.
Beautiful.
So that's stock of the day. What'd you think of it?
Well, Lulu, everybody wants to be experiential. Everybody says they're an experiential retailer. Lulu is an experiential retailer, and that's because they have created an environment of wellness and athletic and mindfulness that is PE expanding. It makes it, what people don't understand is it allows them to be full price. Macy's is half price. Lulu is full price, and they don't talk about that on the comms call. And I wish they had. I wish someone had said to them, just point blank, aren't all these things the way to be able to keep prices high? But that's why Lulu does so well. They've created an environment where you've got double-digit, actually high teen growth, and full price. And that's a combination that says keep buying the stock. Keep buying Lulu. Yes, even up here.
All right, Jim, we also, again, back to the Twitter feed. We got a lot of tickers last night, so let's just do this real quick speed round. You know how it goes. I set them up, you knock them down, so I'll throw them at you. Ulta.
No, not yet.
Not yet? All right, Dell.
Not yet.
GE for the long term?
Yes.
Match? By the way, met my wife on Tinder.
Not with Facebook.
Not with Facebook. They are coming out with the dating app. That is something to keep in mind. And Zora.
Which one? Zora? Not yet.
Okay.
When I say not yet, what I mean is just so we understand each other. You need a couple quarters in those. Almost every one of those is a broken stock, not a broken company. I mean, Ulta is very hard to understand what happened. So I need another quarter to understand what happened because it wasn't with Estee Lauder, that's for certain.
Right.
And Mary Dillon talked about lack of inventiveness, and Fabrizio Freda talked about inventiveness. So I'll take Fabrizio any day.
For sure. All right, let's switch it up real quick. Last night, Bears, Packers, David Montgomery. Let's jump over to fantasy. You have David Montgomery.
Yeah, David Montgomery disappointing, but that whole offense was horrendous.
Got you nervous for your team?
Yeah, did get me nervous because you can't, you do that running back by committee. It's a big mistake because Cohen doesn't have the wherewithal. David Montgomery does. That was a very poorly coached game. Montgomery, he gave me 5.5. This is for bull market fantasy. My lucky thing, not lucky, Bill Enright, who's my partner, I was going to play Deebo Samuel from the Niners. He said, listen, go with the best quarterback when it comes to wide receivers. Go with Exxon Valdez, which is my name for Valdez Scantling. And he gave me 9.2, which I think is better. There is, I think someone might have had a keystroker. Dine in Hell is my person who is against me. And she picked Trubisky. Trubisky. She played him over Mahomes.
Right. So let me ask you another thing on the defensive side of the game. On the defensive side, the Green Bay Packers, they spent a lot to revamp their defense. According to Yahoo and ESPN, they have pretty low ownership rate. I mean, is that
I don't know.
Interesting
I mean,
defense
Chicago is so awful. I just can't tell. But I will say this. If you have a defense that you think is mediocre, you might want to swap out for them next week. I think they're available on a lot of different sites. It's always good to check when you see something like let's say there was a brilliant kicker. I didn't see it last night. Kickers are fungible. Quarterbacks, I would drop Trubisky right now. Many leagues have Jacoby Brissett available. And I think Brissett is going to be huge, because Frank Reich is such a good offensive captain.
All right, there you have it, guys. If you're wondering what to do with your own fantasy team, get over to bullmarketfantasy.com. Jim's got your back. Bill Enright's got your back. He's got Jim's back, too. He's coaching him.
Oh, man.
The guy's a genius. Jim, anything else?
Game time decision, you need to go to Bill. Just ask me. If you ask me, you go to the Bull Market Fantasy site. Ask me, and we'll kick it around. You
can go to the website, Twitter, get the questions. Again, this is every Tuesday, Thursday. They're talking fantasy football, so be sure to get your questions. Jim, anything else as we head into the weekend?
Yeah, go Birds.
Go Birds. All right, see you guys on Monday.